You just had a hard month slaving away flipping burgers at your local McDonald's. You're lying in bed when an email comes in. It says you've been paid $2,000, but your bank account only gets $1,456. You scroll down the stub. Federal income tax, state tax, Social Security, Medicare. This is the modern ritual of giving away a chunk of your money to invisible forces, and they expect you to say thank you. Here's the deal. Taxes are the cost of civilization. You pay. The government builds roads, funds schools, makes sure your favorite taco truck isn't infested with rats, and sends billion-dollar missiles to places you've never been. Income tax hits the money you make. Sales tax hits what you spend. Capital gains tax hits what your investments earned while you were asleep. Social Security is like the government forcing you to save for retirement. They take it now and pay it back later. Medicare is a health insurance tax for older people and those with serious health issues. Now comes filing your taxes. Oh boy. The government knows how much you owe, but it makes you guess. How cool. If you're right, no worries. If you're wrong, you're cooked. Some people pay every few months, some yearly, and some don't pay at all and end up in documentaries. Taxes are annoying, but countries with higher tax rates generally have a higher quality of life. Now, picture this. You walk into a bank, hand over your money, and walk out thinking it's sitting in a vault guarded by a dragon. In reality, that money's already gone. Banks are just middlemen. When you deposited $1,000, the bank took $900 and gave it to someone buying a jet ski. That's fractional reserve banking. They only need to keep a fraction on hand, because not everyone will show up at once asking for all their cash. Unless it's 2008, of course, when the whole system crumbled. Banks make money by lending your money at a higher interest rate than they give you. You're the supply. The borrower is the demand. Interest is money's way of charging rent to exist in someone else's hands. Borrow $1,000, pay back $1,280. Simple interest is a flat fee. Compound interest means every dollar you gave me now has clones, and they also want rent. Say you owe 20% on a credit card. You miss a payment. Now, your interest earns interest. Soon, your $12 burrito turns into a $50 regret. On the flip side, invest at 7% compound interest, and $100 becomes $200, then $400. Then one day you wake up old, rich, and a little smug. Interest is either your worst enemy or your best unpaid employee. Inflation is what happens when money slowly gets less valuable. Your $5 bill is still $5, but it buys less instant noodles and less gas. What causes it? Sometimes people have too much money and all want the same TV, so the price goes up. Sometimes supply chains hiccup. Sometimes it's just expectations. If people think prices will rise, they spend more now, driving prices up faster. A little inflation, like 2% a year, is fine. But if it spikes, savings die and wages lag. The government fights inflation by raising interest rates, which makes borrowing expensive, cools spending, and calms the economy. A recession is when the economy shrinks for at least 6 months. One day, you're fine. Then suddenly layoffs, the stock market tanks, companies cut costs, and everyone saves instead of spends. Causes? High interest rates, a global crisis, war, pandemic, or just the economic cycle. Boom, peak, bust, reset. Think of the economy as a party. Everyone's dancing, drinks flowing. Then the lights flicker. Someone checks their bank account, and suddenly, the DJ is playing sad lo-fi beats about corporate downsizing. Recessions aren't forever. They're painful resets. Eventually, spending returns. Your credit score is a shadowy 3-digit number that decides whether you get a house, a car, or a soul-crushing 27% interest rate on a new TV. It's not about wealth. It's about trust. Lenders want to know, will you pay them back? Scores run from 300 to 850. Below 580, you're a red flag. Over 750, you sparkle with adult credibility. The score looks at payment history, that's the big one. Then credit utilization, credit age, credit mix, and new credit. Ignore your score, and it poops all over your life. Take care of it, and it might help you buy a house. Yes, the game is rigged. Learn the rules, and you can rig it back. Currency isn't real. A dollar bill and a Bitcoin have the same legitimacy, none. The only reason a dollar buys something is that we all agree it does. Money is a social construct built on shared belief. The government prints it. Central banks regulate it. Print too much, and inflation turns your cash into monopoly money. Print too little, and nobody can afford to live. Inflation steals your money. Investing fights back. Thank you for watching.